The average sale price in the Portland metro area did rally this last week, but was it enough to get us back into the black versus the same time period last year? I'll let you know in just a minute as we get into those numbers, plus our supply and demand numbers and the foreclosure numbers and so on and so forth. The first thing up is the average and the median sale price. Both of them rallied up considerably, just above, both of them just above $25,000 higher than the previous week. And if we're comparing these numbers to roughly the same time period last year, the average sale price was only in the red by 0.6%. So we were almost there to even with the same average sale price last year. The median did make it above last year's median just by 1%. So we're really right on par with where we were last year. That means houses today or homes today are trading at just about the same price as they did last year at this time. Just for a little bit of context, RMLS, which is the multiple listing service we use here in the Portland metro area, and is the source of all listing information that you see when you're looking at whatever site you like to look at real estate, remax.com, zillow.com, realtor.com, whatever it happens to be. This is the source of that information. Their numbers did just come out for the month of February, and the average sale price was down 2.2% year over year, so compared to February of 2022. Median was down 2.3%. In January, those numbers are really ugly because we're coming off of really high interest rates in November and December. The average sale price was down 9.2%, and the median was down 4.4% versus the previous year, that year over year average. And the numbers that we're looking at right now are the result of lower interest rates, the rates that we were seeing towards the end of January and the beginning of February, which really lit a fire under market and really drove buyer demand. So the inventory, the supply side of the supply and demand equation, did rise ever so slightly versus the previous week. We ended up with 10 more listings this week than we had the same time period last week. New listings were up significantly. We saw a 45% increase in the number of new listings. Keep in mind that's coming off of that previous week where we had the snow on Thursday and Friday, where normally that's when agents and sellers will be putting houses on the market for the weekend showings. And I think a lot of those new listings didn't happen and got pushed to this last week, which is probably why we saw this big increase in the number of new listings. We'll keep an eye on that and see if that makes sense, or if maybe this is just the start of our spring buying season and we're going to start seeing more new listings hitting the market versus what we've been seeing leading up to that. Looking back over our inventory, our supply of active listings, I've got a great chart for you that shows where we've been over the last several months. And you can see here that for about 18 weeks straight, the number of active listings, the inventory, the supply of active listings had been falling pretty regularly for about 18 weeks straight. And then about 4 weeks ago, we pretty much leveled off, and we've been kind of bumping up a little bit and then back down a little bit. And it really does feel like we're sort of bouncing around along the bottom, and that we should hopefully start to see a bit more inventory enter the market. So on to the demand side of the equation, buyer demand. One of our best measures of that is the number of new deals that went under contract, the number of new pendings. That number did increase again, up 13.5% to 522. We might have expected to see this number increase a little bit because last week we had a strong number despite the snow. I kept thinking, because of that snow in that previous week, that showings wouldn't happen, offers wouldn't get written, and we wouldn't have new pendings, and we still had a pretty strong showing. The number has been pretty steady for the last 3 weeks. If you check out this chart here, this is pretty much the same time period going back to October, the number of new pendings that we've been seeing week to week to week. You can see there in December and January, the numbers were really, really low. Again, high interest rates, coming off those higher interest rates in November and December. And then towards the end of January, interest rates dropped. We started to see the number of new pending deals increasing. And then it kind of looks like things leveled off over the last 3 weeks, which is when rates went from the mid fives back above 6% to where we are right now. As of this morning, it's Wednesday the 9th, 10:15 this morning when I checked Wells Fargo's site, they were advertising 6.625% for the 30-year fixed. Something to note here is that the original sale price versus the final sale price has been incrementally climbing up the past several weeks. I think that's more of an indicator that agents and their clients, their seller clients, are being more realistic about this market, and they're not pricing their homes quite as high. That is, they don't have to do quite as many price reductions to get an acceptable offer, so they're pricing a little bit lower, and on average the sale price is coming in at 97% of the original asking price. So last year at this time, that same measure, the original asking price versus the final sale price, one of the hottest seller's advantage markets I've ever seen, that number was almost 104%. So that's a big swing, 104% down to 97%. The numbers of bank-owned properties, foreclosures, and pre-foreclosures, those are short sales, those numbers have been rising incrementally over the last several weeks, and I have been noticing maybe the start of a trend. It seems like the number at which they're increasing is getting a little bit larger. It was only about 3 or 4 for both of the numbers. I think it was 3 for both of the numbers this week versus the previous week. I have been watching, as I've mentioned in the past, the notices of default, which is the first step in the foreclosure process. Previous week it was only 11. The week before that I think it was also 11. This last week it was 12. One thing that I have been tracking is how many of those are really, really recent. And of the 12, I saw one that was from 2020. The purchase date of that property was 2020. And then there was another one that was 2019. And the rest of them were much earlier in the teens, and then just after 2000, and even a couple of them were back in the 90s. As always, I'll just keep an eye on those numbers and let you know if I start to see something significant. As I did mention, RMLS came out with their market statistics for February. These are just for Portland proper, so this is the city of Portland statistics. They did show that the number of new listings is way down 31%. These are year-over-year numbers comparing February of 23 to February of 22. Down 31.4% new listings, and that's the same story. It's the same narrative we've been experiencing pretty much for the last 12 months now. Number of pending sales is down 30% versus last year at this time. Again, that was probably one of the hottest seller's advantage markets. Buyers were out there in droves. Rates were around 3%, both plus or minus. So no surprise there. The number of closed sales are down, not a surprise. Average sale price, I mentioned, down 2.2%, and the median was down 2.3%. The total time that a home spent on market was up by 35, and the inventory did increase by 1.1 months versus the same time period last year. You can see in this chart here that last year the inventory in months was 0.8 months, right now at 1.9 months. And what this is a measure of both supply and demand. Given no new listings, how long would it take to sell every active listing on the market at the current rate of sales? And it would take 1.9 months to do that right now. Technically, those numbers are seller's advantage numbers. It's, you know, our inventory of our supply of listings is so low right now. So this number probably isn't indicative of what we're actually feeling on the market, which is a balanced market, probably leaning more towards the buyer's advantage. Most analysts say that the balanced market, that number is probably somewhere between 4 to 6 months of inventory. Recently, I've been hearing that number even drop down to 3 months of inventory. We're still below what even the most conservative analysts are saying is what we would consider a balanced market, neither a buyer's nor seller's market, at 3 months of inventory, and right now we're still at 1.9 months. So that's what I have for you this week. I hope you found that information both useful and interesting. If you know of anyone who might find this information helpful, I would love it if you would share it with them. And of course, as always, I would appreciate a thumbs up, and if you haven't followed the channel, please do follow. And thank you, as always, for watching to the very end of the video. We will see you next week.